Hey everybody, it's Tom Sheehan of the Sheehan Real Estate Group of Compass. I'm outside, it's beautiful. That can only mean one thing. We're here, it's summer, and we have our first half year numbers for 2023. And it's been wild. It's been an interesting spring market, and it's great to see the numbers and kind of make a little sense of what we experienced in this first half of the year. So let's look at the numbers for the second quarter. And these numbers pretty much incorporate what happened in the spring market of this year, which is the busiest time of year for residential real estate in the greater Boston area. For the second quarter, the single family median sale price for a greater Boston home was flat essentially. It was $863,500, the median sale price, and that is up about $3,000 from last year. So very, very small difference. And that's a big change from what we've been experiencing. As an example, the year before, in the second quarter, we saw about a 10% jump in the median sale price in greater Boston single families in 2022 when compared to 2021. And the reason why that's a little surprising is because we saw a dramatic drop in the level of inventory this quarter of 2023 when compared to 2022. We saw a 28% reduction in the number of homes listed for sale, single family homes in greater Boston in 2023 compared to last year. But coincidentally, we saw the same level of reduction in the number of sales. So while the number of listings decreased that percentage, the number of sales decreased the same percentage. And what's interesting is while the pricing did not come down, didn't go up, the days on market and the days it took for a house to receive an offer in greater Boston dramatically increased from last year. The days it took a seller to accept an offer was up 72% compared to last year, and the days that a house remained on the market was up 57% this quarter of this year compared to the same quarter last year. Somewhat ironically, though, on average, the sale price to the original list price of a single family in greater Boston in the second quarter was still 104% of the original list price. Now, that's down from 108% of a year ago, but it's interesting to know that on average, homes are selling over the original list price, but pricing is flat. And I think that really speaks to what is going on in the market. What I like to call the meaty middle, the median sale price of whatever community you're in, those are the price points that have been the most popular. And where we're seeing the true softening is at that higher end of each respective market and the lower end of each respective market of homes that aren't nearly as desirable for whatever reason, whether it be some unchangeables like location or size or overall condition. And that's where anecdotally, where you can kind of get a little confused when you're just working with your group of clients. Because I've had a lot of clients who were one of 10 offers, 15 offers, 27 offers where homes were going significantly over the asking price, which would suggest, if that's your only experience, that the median sale price has increased dramatically. But the reality is most buyers are very discerning, and most are gravitating to the same listings that are priced correctly and don't require a lot of work. And you can attribute that to the interest rates. Interest rates have certainly stabilized. We've been in that mid 6, even slightly low 6 range here for some time. And it doesn't look like we're going to be ticking up to that 7-point range. There just seems to be a general kind of flattening of the interest rates. But when you compare it to a year ago when interest rates were at least 1% lower, it's definitely had its impact on the market. And as it were, it's affecting sellers just as much as it's affecting buyers. If we did have the levels of inventory that were more in line with traditional seasonal patterns, I think we would have seen a pretty dramatic effect on pricing. But as it were, the interest rates are also keeping away buyers, which is really dampened the inventory, which is buoyed those pricing to kind of stay flat instead of having a correction down. If there's any real surprising thing about the market is how well condos have done. Especially since we had COVID, we saw a real gravitation towards single family homes, and single family homes performing a lot better than condo. But this past spring, we saw condos perform better than single family homes. The median sale price of a condo in greater Boston increased 3% when compared to last year, up to $730,000. We still had the same effect with the inventory. Inventory was down 30% this past quarter compared to the previous quarter, and sales were down a similar 33% this quarter compared to last quarter. And while the days to offer and the days on market increased this quarter compared to last quarter, not to the same extent that they did for single family. Days to offer were up 30% this past quarter, and days on market was up 19%. And the sales to list price ratio was 101%, the sale price compared to the original list price. And that's surprising because usually single families are performing a lot better than condos, but I wonder if it gets back to the interest rates and the more affordability of a condo with its lower median sale price compared to a single family. And we look to the year-to-date numbers, we see similar trends. We've kind of been maintaining this trend for the first 6 months of the year. The median sale price of a single-family home is up 1% through June when compared to last year. Inventory is down 24% the first 6 months this year compared to last year, and sales are down about 25%. Days to offer is up about 66% this year compared to last year, and the total days on market is up about 54% this year compared to last year. But again, the sales price compared to the original list price is still over 100% at 102%. And same thing with condos. Condos are performing a little bit better. The median sale price is up about 3% this year compared to last. Inventory is down 23%. Total sales are down 24% compared to last year. But the days to offer is only up 19%, and the days on market is only up 15% compared to last year. Now, the sale price to original list price of condos is only 98%, and last year it was about 100%. Now, there is something to be noted about the condo inventory because we have a lot of new development in Greater Boston, and a lot of it is condos, and a developer's not going to list all those condos all at once. In fact, they might have one condo that they list, but actually have 15 units of that same type that they just don't put on the MLS. So those inventory numbers could be a little skewed, but still, it's surprising to see the median sale price of a condo outperforming the price of a single family. So the bottom line is this: interest rates have had an effect. It hasn't taken down the pricing that I think the powers that be would hope, at least not in the Greater Boston area. But they've certainly slowed the pace of appreciation dramatically, and the absorption rate of homes are down. If we had normal levels of inventory, we probably would see a pretty dramatic shift in pricing, but the way it's played out, it's pretty much just flattened things. If you bought your home 2 years ago, you're probably pretty happy about that, and if you bought your home last year, maybe the home hasn't appreciated to the level that you'd hoped, but chances are you're not exactly underwater. And the reality is some homeowners who bought last year at last year's rates probably couldn't afford their same home this year at today's rates. So from an affordability standpoint, you're probably pretty happy you bought last year, even if your price hasn't increased all that much from when you bought it. So what can we expect for the rest of the year? Well, as you've heard me talk about a lot, things really slow down in the summer. We see a bit of a tick up in fall, and then things die off in the winter. And the way the first 6 months go, it's kind of hard to expect anything different. I expect interest rates to remain pretty much the same in that low 6 to mid 6 range. And I expect inventory to be down in that 20 to 25, maybe even 30% range that we've been seeing since the beginning of the year. And I expect sales to remain depressed in that same amount of range. But the summer and the fall and the winter especially always present good buyer opportunities. So if you're a buyer and you've stuck it out this long, generally you're going to find that you're not going to be competing with as many people as you were in the spring. And if you can stick it out through the fall, you might see some pretty good opportunity where you see an uptick in the level of inventory and without the same level of uptick in the amount of buyer activity. If you're a seller, listen, you're dealing with very discerning buyers. Pricing is going to be extremely important. Presentation is going to be extremely important. So gone are the days where you just put a sign in the front yard and you can expect a handful of offers. Buyers are very discerning right now, so preparing your home properly is extremely important to have success in this market. As you always hear me say, everyone's circumstances are different. So if you want to know how these market conditions impact your situation, give me a call, shoot me a text, or send me an email. I'm happy to discuss your circumstances and find the best way possible. Thanks for watching. Happy summer, and we'll be talking to you again soon. Thanks.